Hello, everyone, and welcome to another episode of Environmental Social Justice. I'm your host, Wendy Nystrom, and today's special guest is Brian Thompson. He is the Senior Vice President with Descartes Underwriting. Welcome to the show, Brian.
Yeah, thanks, Wendy. Thanks for having me. Pleasure to be here.
Anytime. And today we're going to talk about the wild world of insurance, specifically focusing on your specialty, which is parametric insurance and alternative risk transfer. All that means, folks, is just taking special risk and transferring them differently. And we're in a very unique situation with all of the disasters that we have had across the country. And insurance is coming up a bit. And you actually have some pretty good ideas on how to address that. Would you mind briefly talking about your background in insurance and what parametrics is and your thought process?
Yeah, absolutely. No. So, I've been in insurance for over 15 years now, varied roles. Started off actually as a captive personal lines agent. Really had the opportunity, and I had a risk management degree and had been exposed to kind of the broader insurance market and had the opportunity to move into reinsurance. So did that for a little bit. So was able to really get to understand kind of the nuts and bolts and how insurance moves through the market by doing that, how capacity, insurance companies are able to operate the way they are. Unfortunately, that role did have me traveling quite a bit, and I had two very small children at home that I missed. So I took a role with a different company and kind of stepped back from the road and managed kind of local distribution in Arkansas where I live. And then I had the opportunity 2.5 years ago to join Descartes in the parametric space, and was very excited to do so and kind of work on a new emerging market. It's an area that I think really has a lot of potential growth impact and can really change the way we handle cat perils. So, catastrophe perils, so wildfire, earthquake, hail, wind and hail, all the problems that we
all kind the big ones.
Yeah. Stuff that makes the headlines as issues. Is there a better way to do that? And Descartes is kind of approaching that, and had a chance to join here. We only do parametric insurance. So parametric is quite a bit different, I think, that a lot of people are used to is their traditional insurance. We trigger off parameters, right? That's where the name comes from. So the way to describe that is it's basically pre-negotiated payouts for predefined triggers. A trigger can be anything from, a wildfire being within 100 meters of your property boundary to a Cat 3 passing within 20 miles of your location, or, hailstone size impacting you over a certain threshold. And all of these numbers can be adjusted and modified and built to really fit your need, but it's all predefined ahead of time. So when that event does happen and you suffer a loss from that event, we're able to immediately pay you those predefined negotiations. There's no loss adjustment period. You're not wondering, like, what am I going to get? Am I going to get anything? How long is it going to take? You've got that recovery immediately, so you're able to start kind of recovering. I mean, really, rebuilding your life or recovering from the impact.
So just real quick, just so people can really understand, when you have a parametric trigger, there's no claims process, there's no attorneys involved, there's no back and forth of what values are. It's when you hit this parameter that is agreed upon, you get X amount of dollars.
Correct. So it's all pre-negotiated, right? So and the same time we know that your insurance broker knows it's all part of the contract. There's no, but it wasn't this happened based on this data set that we all agreed to ahead of time. Here's your payout. There is a little bit of a miscommunication, I think, a misunderstanding that you don't have to also suffer a loss, that you can just, hey, if this happens, you get paid. And at the core, it is that easy. This happens, you get paid, but you still do have to suffer a loss because that's what makes it insurance. Yeah. And so now what that loss is the full economic loss. So any lost revenue, expense you built in with that, in addition to property damage. So it's not just the building itself, it's all the costs that go along with that event.
What's interesting, I mean, I've been talking about parametrics for years, and I'm surprised that there aren't more companies really focusing on this and trying to get it out the door, because with the disasters we have had, I'm in California, the wildfires were absolutely devastating. Two very different neighborhoods for the Eaton fire and the Pacific Palisades fire. We're talking billions, tens of billions of dollars in loss. And insurance carriers, they have been non-renewing. It's too high of a risk. And I keep telling people insurance carriers are for profit. If it's too risky and they're not going to make enough premium out of it, they're going to leave. Could you explain, because I'm obviously a huge fan of parametrics, how would you see parametrics play into, let's say, the wildfire scenarios we're facing?
Yeah, so I think there's a couple different ways to approach that. You can look at it on a larger scale for a large HOA client or just a large risk. And typically in that case, we're part of the overall program. and the immediate liquidity is a large part of what they're looking for. Is, hey, you get the payout within a matter of days, and you're able to begin the recovery. You're able to start, getting the better contractors, covering any sort of increased expense, or if you're individuals and need to, obviously at this point find somewhere to live while you're waiting on the rest of your policy to go through the adjustment process, which can be years in a post environment. You're able to at least begin the recovery and you get the money then. Additionally, with municipalities, it's an area that I personally have been working on and trying to champion quite a bit of, a lot of the larger municipalities do have disaster funding. They do have recovery efforts for low to moderate income, citizens in their area, but those programs are usually relatively limited in the funding they have available to them. So one thing we can do, and we've been trying to grow this placement throughout the U.S. is, let's say you've got $1 million fund post-event and this happens, take a small portion of that, carve it out, buy a parametric from us that triggers at the exact same thresholds that you would normally issue these grants or these funds out. And then now you've been able to exponentially increase the amount of money you have available to your citizens, right? And then how much you can help them. And now they're able to, especially again, the low to moderate income, they're disproportionately affected by catastrophes. They typically don't have as much of a backstop to recover or potentially not even evacuate because they can't afford to. And so you're able to provide them some immediate income or immediate relief to where they can afford to evacuate. They can't afford to find somewhere to stay. They can begin their life recovery. Studies, it shows it has a significant impact long term and your community as a whole and how quickly the community is able to recover as well.
And just to really, I want people to really understand this claims process is fast. It is not, you submit your claim, an adjuster looks at your policy, then looks at what you lost. Are you eligible for these things that were destroyed, damaged? What's the value of that? If it's actual cash value, meaning, you bought a TV 20 years ago, it's only worth $10 now versus replacement, I have to buy a new one. That all goes away.
Yeah.
This is you had a loss, you get money.
Yep. I mean, in our case, for wildfire specifically, we are triggering off satellite data. And so we'll have a boundary that's kind of created around the property we're insuring. With wildfire, there might be a little bit of a delay, unfortunately, because if we're looking at a satellite and there's smoke covering the area, we're not quite able to see exactly where it is. But typically that's still just a matter of a few days until we're able to get a valid satellite shot. Once we have that, we can say, yep, the fire burned into this coverage area. Here's your payout. There's no question of you got to prove receipts. You've got to find, like I said, the TV you bought 20 years ago. Can you prove anything that you owned it or anything along those lines? It's, you wanted this much for this event. Here you are. So in a matter of typically less than 2 weeks, you've got your recovery and you've got your payout. And you know what it is the whole time.
Honestly, this is really what insurance needs to morph into. I've been talking about the insurance industry needing to be disrupted. Yep. And this by far is the absolute pathway that needs to happen. So when your triggering points or your parametric points, that's just a satellite image, ring of fire, so to speak, lack of a better term, saying you were in this burn area. So your coverage is triggered. That keeps it so simple. I used to think that we would have to categorize our wildfires the way you did a hurricane. This
got to be named. Where did it originate from? We just look at, was it a hostile fire? So did it originate from outside your property? Because we're not covering. And typically, you can still get home fires, right? And this is for
this is for disaster. This is wildfire disasters. That's really fantastic. Right now, you are currently writing. You guys are up and running. This is not just an idea. You are doing this. Can you give an example of maybe one? You said HOAs. Does that satisfy the mortgage requirement to have property insurance?
So I will say that does vary. Lenders typically have been more open to it. We've seen this a lot in Florida. So I started 2.5 years ago, predominantly in the Southeast at the time. And so we were mostly working in the hurricane space. And it seemed like early on in the process, lenders were like, I don't know what this is. It doesn't look the same that I'm used to. And they just weren't comfortable with it. As that market continued to collapse, as the 22, 23 hurricane market, unfortunately, was in a very similar position to the wildfire market in California right now, to where there wasn't capacity. And so people were kind of coming to us and like, we need something. Can somebody give me anything? And so we were able to provide that. But we had lenders that were like, I just don't know. And then as the year progressed, by the end of the year, lenders were referring clients to us. They were like, look, have you looked into this parametric thing? We've seen them with other people. You should look into it. And so the acceptance has come along significantly.
Yeah.
in the last couple of years. We still run into it occasionally, and usually in that case, it's just a matter of, can we get in front of the lender to explain the process, the methodology behind it, and then they usually get very comfortable with it at that point.
No, and you're right. When it was new, because, being the person I am, I sit on a lot of, webinars.
Yep.
And there was one, I would say 2 years ago, 𝒉𝒂𝒐 is this insurance group,
Yeah.
and they have their construction risk conference, but the energy one, I forget. The ERIC, I think, is the acronym. I forget what ERIC stands for, ERIC. Like energy.
Yeah, they have that one, transportation, TRC. Yeah, they've got a bunch of them. We go to you as well.
And this was like at the tail end of COVID. So everything was online. I'm like, well, I'm going to use my time wisely. I'm going to watch this. And I asked the parametric question of the panelists who were very well known within very large insurance companies, and they completely ignored my question.
Yeah.
I had it queued up, and I saw them go down the line asking, and they jumped me. They went right on. I'm like, wow, they didn't. I mean, this is new, and the fact that you guys were able to take it head on really speaks volumes, because a lot of these other carriers, because I've been talking about this for a long time, they just kind of ignore it, or we're still figuring it out, or we've decided to write a bunch of papers about it. You're doing it.
Yeah.
And that's, I stress this so much. We need to stop talking and start doing.
Yeah.
And
the market needs help, right? And they're,
yes,
just because that's the way we've done something from 200 plus years ago at a tea house in London doesn't mean that's the way the industry still needs to operate today.
Yeah, that's just a Lloyd's of London reference, everyone. It was a coffee house in London. And, that's where a bunch of people got together. They invented insurance there. But now with people, what would be like an average premium cost for these things?
So it does vary. I will say
Parametric
as a whole is still relatively cost prohibitive to just the individual personal lines consumers. For the most part, it's not really at a personal lines level yet.
No, these would be large municipalities.
Yeah, so it is. Yeah, municipalities or larger corporate entities. So usually between $50,000 to $250,000 is kind of the average premium size. But you get quite a bit of coverage for that too. That's not $50,000 for $500K. So,
because I remember I saw a policy once. It was one of the first parametrics in Cancun. Yeah. And I saw what the premium was, and I saw what the limits were. I'm like, not a great deal, but it was brand new. I mean,
it is coming down significantly over, just really 10 years ago, I think is when it kind of started making its way into the, I won't say mainstream, because we're still definitely not there yet, but it started being more approachable for, not large NGO or not, non-government multinational organizations or things like that. So it really is approachable at the mid-market level now, and even really below that. But I think on average, most of the parametric companies, like in Descartes, we tend to start around $40,000 as kind of the soft floor of a minimum premium.
That's not bad. I mean, when you're talking about, large corporations or even municipalities, that is not a bad deal, because I've seen the premiums for these places. And, most large companies that I've seen, especially if they're like portfolio packages, they'll spend well over 1.3, 1.5 million annually on property insurance.
Yeah. And we do have some very large placements as well. But, like I said, it depends on what you're trying to build. And I think one of the beautiful things about this too is almost everything on our policy is negotiable. And so, as we build these trigger points and the payouts and the data sets and things we're looking at to kind of create the policy and structure it, those are all levers we can pull. So if you've got a hard and fast budget, we can build something around that. If you've got more so like we're focused on the coverage and the need and making sure it's effective, we can do that for you as well. I think one of the things that does help a lot is we're underwriting the probability of that peril occurring at that location. So I'm not looking at loss history, building type, occupancy type, updates, because we're not triggering off the loss. We're not adjusting the loss. So all these things that really go into how bad the loss might be or the fire might be, we're not worried about. We're looking at what are the chances based on our modeling and our forecasting of this happening at this location and the level that you're wanting coverage for.
So it's the catastrophic loss. So just so people understand, this isn't going to replace your property insurance.
Correct. Yeah, we're not trying to replace traditional indemnity.
Yeah,
we're
working
in the gaps, basically. We're trying to fix.
Can you do excess? What about excess over a property policy?
We can. It is a little bit harder because typically, the excess placements is going to be, 5 million excess of a underlying 5 million or something along those lines. Someone has to adjust that. And so it makes it harder for us to really fit into a tower. What we'll do, however, is we can figure out kind of what level of event needs to happen for you to exhaust that underlying and for us to then need additional capacity. So whereas a tower may traditionally sit kind of on top of each other, we're more here. We're kind of to the side, and so we'll build our trigger points to kind of align where we need it to align. But it's still, we're triggering off the event of a loss. So we don't, I will say Parametric doesn't fit great in a tower. We can make it fit in the tower with a deductible. Someone just needs to let us know when that's been exhausted, and then we look at the triggers and everything else. But we prefer not to, because it is a first dollar coverage. We want to make sure that we're filling in the gaps, not just capacity.
Yeah, no, I get it. You want to keep the risk pure, right? And that makes it simple for everybody to get that check quickly rather than having to deal with claims. So Brian, more importantly, how do people find you? Because this needs to happen.
Yeah, absolutely. I mean, I have very easy email, brian.thompson@Descartes Underwriting. Most people pronounce it as Descartes, if that helps you phonetically figure out the email address. And I'm sure you'll have it available as well. You can reach out to me there, LinkedIn. Feel free to share my contact information. We're happy to talk with really anybody about this. So
you are very visible on LinkedIn, because that is how I found you, because I wanted to talk to an expert in parametric insurance, and here we are. Brian, thank you so much for your time. Please keep us updated on what you guys are doing, or if there are any changes. Obviously, anytime you want to come back and talk again, open invite. I think this is probably the most exciting, because I'm an insurance nerd, but also important change that we have seen in insurance, and well needed. We are ready for this change to happen.
Yeah, so are we, and that's why I'm here. Right? I felt like there's a better way to approach this that can help people recover faster and less unknowns and this nebulous what if that kind of comes along with claims, and just the angst and anxiety that all that can bring.
Fear.
How can we help solve that, right? Yeah, fear. I think it's a great way. Like, what's going to happen? And even insurance professionals sometimes don't know, just because of the way our current policies approach these things. So hopefully we can get it changed and make it a lot easier for everybody involved.
Yeah, and that's the most, the ease factor is probably the most important thing, because I went to a wildfire thing this weekend and spoke at it, and I've been helping people. They're terrified. People are scared to death, and the emotional stress they're going through of, am I covered? Will I get covered? How much am I going to get? How long will it take?
Yeah.
This is why parametrics are so important. So guys, please check out Brian Thompson at Descartes, if you want it phonetically. It's an underwriting firm, so they are the carrier. They look at they actually do the writing of the policy. You'll have to go through an insurance broker to work with them. I believe that's correct for you guys. Yeah.
So we are an MGA, but yes, you still have to go.
You are an MGA, yeah. Managing general agent is what MGA stands for. We're not going to go down the rabbit hole of insurance jargon right now.
A few more hours for that, yeah.
4 hours, yeah. It's like we could, but then y'all would fall asleep. Absolutely. So, Brian, thank you so much for your time. Guys, please check them out. Please get parametric insurance to be more popular. We need this. This is important coverage to have. So I thank you for your time. I am Wendy Nystrom, your host with Environmental Social Justice. We are now proudly sponsored by Bar-A-Largo. They make life better, so please check them out as well. And we'll catch you next time, folks. Take care.